let's start off by talking about what real estate syndication is. So typically when people think about investing in real estate, they're wanting to buy the actual asset, the actual duplex or the office building or a car wash, or pick the example. Now, the negative is that you're sinking a lot of your capital sometimes into a single property. You don't have it spread out over multiple places. You typically are trying to manage it yourself. I've watched people try to be a landlord, and if you've never done that before, it's really not all it's cracked up to be. My wife and I early on had a number of rental houses, and we got a call on a hot water heater at 6 o'clock on Christmas Day. And then the reaction was, well, it's been leaking for, about a week, but it just bothered me today. So syndication gets rid of all those things. First of all, real estate syndication means that you're typically a limited partner investing with multiple other people. So you have your part of capital. You might have, in our transactions, maybe 40 to 80 people that are participating with you. You don't have any liability in terms of something happening on the property. You're not going to owe any more money later on, but you get to enjoy a professional management company running it. And then you get to enjoy both your distributions or ultimately sales price as being an investor, not actively involved. So that means syndication means packaging deals together that you can participate in that maybe you couldn't afford on your own. Typically, it's got some debt attached to it, and all those things are done where all you have to do is decide if it's appropriate and participate, not all the other things. A good real estate syndicator will give you periodic updates, like maybe quarterly of here's what's going on. At Prevail, we will do quarterly updates on every property that we're involved in. We'll try to tell them about lease rates or market conditions or economy and those things. And that allows people, again, to not just diversify their money, but have optionality in terms of how they put it to work, the dollar amount that they put to work. And if somebody is trying to get a certain amount into real estate over a period of time, it allows them many choices. We believe that's so much better than picking one thing, and it might work, but it might not. Finding a good partner, and real estate syndication is an adjective that frankly covers a lot of ground. Pardon the phrase. But I think it's important that they, number one, are already vetting deals for you. We will typically look at 25 or 30 deals to do one transaction. Most investors don't have either the ability or the time to think about that. Next, we have a lot of real estate partners nationally that are bringing us things that we get to look at and bring to our clients. And at Prevail, typically, both we, owners, and the firm are investing in these deals too. So it's not just somebody else's money, it's our money. It's our transaction. And so I think syndicators allow people to both participate, look at a lot of transactions, and probably limit their risk. That's probably the best thing, where they're not putting too much in one spot. Most of the time when we have people that come in that have had big losses, they didn't look at the overall exposure, and they didn't have somebody helping them build it out in a way that they could understand that if something went wrong, what happened. All we want to think about is what happens if things go very well. And unfortunately, in the investment business, both sides of those things can be true.